Good morning, everyone, and welcome to the European crossover webinar. And we saw dramatic moves, obviously, to finish up the week. Cable was one of them right here, and we've gone and pared back a bit here. Let's go on and pull this back out. There we go. Looking over here on the 2-hour charts, we've pulled back a bit here. There's actually some support in here at this 25.73-ish. We're just below that at 66, but obviously some big moves that we saw here in cable. We can take a little bit closer look here. It's clear on the daily. Well, we came up here, right up here to the 50%, but before getting turned back a bit, you can see here the key is this 2602. This was a major level here for this to break above, and actually for us to be below 26 is certainly helpful for those that are short the market. Well, let's go and take a look across the board. And we've seen peso just really moves up in here in the peso up to, I think I mentioned on the analysis, to 38, also in 43, really a sell here at this point in the peso. Peso can do whatever it wants at this point, but it's, we'd mentioned this earlier in the week, not earlier, but like by midweek, as it continued to slide, it's like pretty much it's done. Because once we got past that 1944 on the way down, that pretty much just cooked it. It really had to hold that area, that 1944, and really it's opened the door now. You can see here we were able to even take out the prior week's lows, and it's pretty much thrashed away the bulls. If you get a rally back up, it really doesn't mean anything to me. This market could rally all the way back up to 1960 and not mean a thing, seriously, because it's lost so much. I mean, anyone who was bullish, we saw that very nice rally, and then we turned around and gave back. Then we made a feeble attempt just to move a little bit higher. But the key was at 1944. That was the last area to go and hold. When it didn't, it just really opened the door for them to take out the lows, which they did, and potentially a challenge back here to this breakout level of 1923.6. We've also seen the dollar yen come off a little bit here also. This whole trade thing, which really isn't a trade thing, is just, a lot of BS. But obviously you can see that's anticlimactic. I mean, so if there was really some kind of a great deal, this market really would have taken off because, like I said, as much as it's come, it has come a ways. But I'm just saying, even if you look at the S&Ps, they had actually come higher. But this bit of the phase one is just a bunch of baloney. So the markets are pretty much seeing that for what it is, and basically paring back in here. You don't even have to look any further than look at the Aussie and the Kiwi. You see, I mean, if there was any great deal of it, we'd have pushed even higher. We're just fading back. Like I said, I was just saying, okay, a lot of, the continued smoke and mirrors. There isn't even a deal. It's called phase one. So like I said, the markets are pretty much giving back what they had. Dollar CAD has really come off quite a bit in its own stark bit of a reversal here. One of the things we kept talking about was the necessity about that getting beyond that 33.36, and it was Thursday that we said, gun to head, you could actually take a short against this. I remember saying that you can take a short against this and either put your stop at 33.36 or 33.36 for the close by the day. And we certainly saw this market come apart and then further make a move on that. And there you go. So we've really come off quite a bit and really has changed things around after doing quite the turnaround to rally. Now I did have to turn around to go in and run out of gas here. Taking a look here in the cross rates, we've now seen the Aussie yen once again here sliding back. It basically just opened up and just kept on sliding. Like I said, the headline news really isn't real news to to borrow a quip from Trump. I'll call it fake news on this whole trade deal. We've seen once again the guppy coming into some support level right here. Actually, coming in this 35.87. So let's go in. We'll go in and take a look at data. So a moment. So at the top of this next hour, we do get Eurozone industrial production, and really no. Well, today's going to be Columbus Day here in the States. So obviously, while the government offices, there is no government bond trading, although markets are open, but it's going to be fairly quiet. We move into tomorrow. We'll have French inflation numbers, UK employment, and German zoo tomorrow. We're coming to the States. Really, just the only thing we're going to have in the States tomorrow is going to be Fed manufacturing. That's it. We really don't get cooking until Wednesday with Italian industrial orders, UK CPI and PPI, consumer prices in Italian consumer prices, Eurozone HICP, and in the States we get retail sales. That's not till Wednesday. CPI data for Canada Wednesday. So let's just go and we'll make a move to the news. We'll come back over here. Okay, it says the dollar holds near the 2.5-month high versus the yen on trade progress. Sterling is firm. The dollar held near a 2-month high, 2.5-month high against the yen on Monday on signs of progress on U.S.-China trade talks, while sterling's rally ran out of steam after touching a 3-month peak on hopes for an orderly British exit from the European Union. On Friday, the dollar strengthened against the safe haven yen to as high as 863, its highest since August the 1st, before Trump said that U.S. and China had reached a phase one trade deal. Talk about fake news. It paired those gains after Trump announced agreement covering agriculture, currency, and some aspects of intellectual property protections. I saw news in Reuters that said even his quip about the $50 billion isn't even, I think they said something like it shouldn't be even made a big deal about because it won't even come about until they get beyond a whole bunch of hurdles of other parts of additional protections and other phases. So, like I said, I don't want to belabor it, but I'm just saying it is what it is. I mean, let me put it to you this way: the markets are telling you that. I'll leave it up to the markets what they're telling you about what they think about this news headline. In Asian trade Monday, the dollar inched down to 108.34 yen, while the euro stood at 10.34 versus the greenback, off Friday's 3-week high of 1062.5. With Tokyo's market closed for a public holiday and the U.S. also seeing partial market closures for Columbus Day, trading volumes will likely remain lighter than usual. Analysts said the further gains in the dollar yen may be limited because the partial deal between the world's two largest economies appeared to lack substance. Yeah. With limited progress on structural issues such as technology transfers. The trade deal looks more, yeah, exactly. And I didn't even read the story. Like I said, I didn't even read the story, but like I said, I was just giving you my 2 cents. The trade deal looks more symbolic than substantial and might be better described as simply an interim trade war truce, said Ray Trill. The Phase 1 agreement, if inked, does little immediately to brighten the outlook for global trade and growth, while it shouldn't prevent the Fed from agreeing to cut rates by another quarter point on October the 30th. It doesn't provide a firm pretext for significant or sustained U.S. dollar depreciation. The deal represents the biggest step between the U.S. and China in a 15-month trade dispute. Friday's announcement did not include many details, and Trump said it could take up to 5 weeks to get a pact written. It could acknowledge that the agreement could fall apart during that period, though he expressed confidence it would not. In sterling, the British pound surged on Friday as high as 127.08, its strongest since July the 1st, and a 5-month peak of 86.90, 5.5 pence of the euro. On Monday, the cable ran out of steam and it was last traded at 26.10. We know that it's even lower than that now. The EU agreed on Friday to hold another round of intense negotiations with London in a bid to break the deadlock and secure a deal. EU negotiator Marco Barnier and his British counterpart Stephen Barclay earlier held what both sides called a constructive meeting in Brussels. The British Prime Minister said on Thursday they found a pathway to a possible deal, and by Friday some officials were expressing guarded optimism. On Sunday, British Prime Minister Boris Johnson told his cabinet a last-minute deal was still possible as the two sides pressed on intensive talks to avoid a disorderly Brexit on October 31st. Britain said there would be more talks on Monday, with Johnson hoping a deal would be agreed in time for EU leaders to approve it at a summit in Brussels on Thursday and Friday this week. But he still had to be convinced a deeply divided British Parliament to ratify the agreement, while the European Commission said a lot of work remains to be done in a statement issued late on Sunday. Brexit talks between the UK and EU will continue today, with the EU Council meeting to take place on October 17th to 18th. Brexit headlines will be the main focus this week, said Daria Parthamenko. With that, let's go on and move into the charts. Bear with me one moment. So let's go and start off with the euro. And I did go in and if you see the Blake's here, so he'll be doing the basic technical analysis. I was doing my portion to help out while he was out, but he'll be doing that, and I'll be back to just doing the Asian update on these majors. But I do have the Asian update to kick off the week. One moment. So on the update, it says the euro closed above key resistance level 1020 last week with the aid of a sell-off in the bunds. There's a potential to 1130 with initial resistance is 1075, confluence with 1083 to 38%. Support is 1007, followed by 980. So we are a little bit on the backslide, but currently right now our initial support is 1070 down to 1007 down to 980. Let's take a look here. So let's see what we'll give it the benefit of the doubt to start the week off. It's a little bit close. We may end up dipping below that, but we'll go with that 1007. On the upside, we did mention about this 1075. Certainly seems like we have a ways to go before we get there. So let's get this out of the way. And for starters, it is 1075 as we move higher, but for right now, until we get above it, we'll go right here with this 1053 that we had. Stick with that. Also, with Columbus Day, and there's no economic data. It may stay relatively quiet, so we'll stick with this for now. Let's go move into the cable. So it says the cable's fierce rally took out key resistance at 2602. We talked about that. We came on its way to 2672, the set 50% of 1959 to 3383. You can see that right there. Followed by immediate resistance is 2692, followed by 2743. Trapped shorts will provide a solid bid on pullbacks to 2542. Only negative news can derail the bullish picture. So we're looking for 2542. That's going to be our bias chart support. So far, the low's been 25.55. So we're looking at 25.42 here on the pullback. And on resistance, well, let's take a look at the 2-hour chart. Let's go to a 30-minute, see if we see a little bit closer look. I'll go right there, 26.30, 26.30. A little bit of a push here. This is the key area right there. This is huge. I mean, if we pull back here, there'll be a push here, but let me some resistance. We'll just go with that 26.28. 26.28 on the upside. Actually, this is a 30-minute. Okay, it says here on the Aussie gently closed above the downtrend line at its best levels of the week, but without clearing resistance. It's resistance level of 68.09. You can see there in the pink. A move above will allow a move to 68.81. Support remains 67.25. Well, we'll see where we go from here. But like I said, And my point being here is we closed above it because it's down sloping in the sense that, if we close at this level right here, let's say a week ago, we still wouldn't be above the trend line. It's only because of the slope of the trend line. And my point being is we really need to get above 68 or 8 or 6. God, I can't even talk. 68.09. Obviously, if we got above 68.09, just like when we were referencing the euro, it accomplished 2 points. It closed above horizontal resistance and would be taking out the trend line. Here, the primary reason we're taking out the trend line is because of the slope of the trend line. Obviously, each day it keeps going lower and lower. So it's kind of like an empty victory. Hence my point about stating it closed above the downtrend line at its best levels of the week, but without clearing the resistance level of 68.09. So kind of like an empty victory, so to speak. And we're losing it already. But the key thing is we still haven't gone beyond that 68.09. Obviously, like I said, the market's not buying any of this trade announcement, trade truce, trade detente. And you're seeing it pair back. So resistance is still going to remain this key 68.09, which it looks like it's going to have a tough time with that. And I did put it for 67.25. So when we come back here, this was in case we saw a big jump, which we didn't. We mentioned 25. We've got here just 23, 25 on a daily. So we'll just keep that as analysis said. And let's go move into the Kiwi. I mean, the markets are telling you what they think about this supposed trade deal. The Kiwi remains weak, although attempting to forge a bottom. The pair needs to close above 63.58. You can see that up in here to generate upside momentum. Support remains 62.67 on a closing basis. So we'll go with 62.67. There we go. So you can see not much, basically a ho-hum reaction in the markets. Says the dollar CAD linkage gains in a dramatic fashion after it was incapable of closing beyond 33.36. Immediate downside target is 31 even, with minor support at 31.74, followed by 31.36. Resistance is 32.36. So we'll ink in the resistance quickly. And we will flip the euro to bullish right now, but it still has more to go. Obviously, cable's bullish. Aussie and Kiwi remain bearish, and the dollar CAD has gone to bearish now. And we did mention on the support, we're looking at 31.74. And we're going to ink that down. And let's go into the dollar peso. The dollar peso has given up its rebound gains, is in place to challenge the breakout level of 1923.6. A break below sends a pair to 1916, followed by 1908. Resistance is 1938, followed by 1943. Look, this thing's bearish at this point. Now, like I said, if you get a rebound, the rebound really doesn't mean a whole heck of a lot. I'm just saying is one of the things that the reasons why I'm just looking at it from an overall, if we want to call it longer term perspective, at least longer term for us, because we focus on the intraday to maybe 2 or 3 days out. Look, I gave this thing the benefit of the doubt, and for good reason, because when we finally broke above 1923.6, man, we were open to move higher, and move higher we did. And then we fell back, and then I remained bullish because I said, hey, as long as they can hold above here, and we actually had to hold the 61%, and they did just that. And they really, I mean, they didn't take off like gangbusters, but they held it, and then they finally started to move. And remember, we were looking for resistance around 1985. As we moved higher, I think initially we were looking for 1982 and then a pullback, and then we adjusted it to 85. I think we ended up topping out at like at 1986, and then we turned around and we rolled back. And I thought, okay, they're probably going to hold this 1960. Well, they dipped below that, and they just rallied just barely a bit, and they started to lose it again. I'm like, wait a minute, this is not good. You know, we need to be holding around this 54.48. And my take was, hey, look, you lose 1944, that's it. It's over. And certainly we did lose 1944, and then that opened the door for us to then move to new lows. And move to new lows we did. You see, so anybody that was bullish from a technical standpoint say, well, look, I'm not going to be bullish if we end up taking out these lows. And we did take out the lows. You know what I mean? So right now, it doesn't matter anymore. This thing is a sell now on any rallies. And we're looking at 38 and then 40. I think it's 43 that we had here for the peso. Let me take a look here. Followed by 1943. So we're looking at, so we'll start out with 1938. And this is now bearish, straight up bearish. And tomorrow we may move it as high as 43, but right now it's 1938. And on the downside, 1923. That's the breakout area. If we get past that, we're looking at 1916. Let's go move into the dollar yen. The dollar yen has rallied mildly with risk on. I mean, and for those that were short, it probably didn't feel like it was a mild rally. But what I'm saying is we could be a whole lot higher considering where the SPOOs went. So the dollar yen basically has been playing this bit of, I'll believe it when I see it. You know, the whole trade news thing, if you want to call it that. Dollar yen is rallied with mild risk on. The pair is open to a sell the fact, which obviously we're starting to see pull back. Resistance is 871, followed by the major pivot of 927. Support is 778, followed by 714. So in case we do slide, we're going to go with this 778. And on the upside, as I mentioned, 871. We'll probably tone that in a bit. So let's take a look at this on a 2-hour. We'll go right there with that level 850 on the upside. You can see what I'm referencing right in here. You see right there? Actually, you can call it 851. So 851. And if we do get that slide, at least for now, we'll go right there. 788. And with that, we'll move into the cash dollar index. Moment. So since the dollar index has slid to the bias chart support, oh, that was for what we had on Friday of 98.30 in a reversal of fortunes. The technical target on the horizon would be 97.89. Resistance is 98.72. Expect volatility as the China trade headline is played out. Well, like I said, it's been kind of like a big thud, and you're seeing a little bit of a give back on many of these markets. Is it really wasn't much of a big deal, and you wouldn't have expected it after all that stuff. And then what? They're going to resolve it all within 2 or 3 days was pretty silly to expect that. So I'm going to go with the 98.72 that we mentioned. On a very short-term basis, we will say it is bearish. Now, what we're saying is we think overall we can come back down to 97.89. Where are we on a very short-term base? Well, I'm going to go here to the bottom of this zone here that we've had in the 2-hour chart. You see that 98.14? That's what we'll just go with for today, 98.14. And let's go to the Kiwi yen. So since the Kiwi yen broke from its slumber to the upside, momentum should allow a challenge to 69.50, but support is the breakout level of 68.15. Well, you can see right there, we're at the 68.15, and we pretty much given back. I saw from Blake's, if you saw the week ahead video, and he actually exited out on Friday. Wow, great exit. I'm glad for him because, like I said, we've turned around giving this right back here. So very nice exit on his part. So we've got the 68.15, and on the upside, no changes. You see what I'm saying? Because this is where we broke out, but we've turned around and slid right back in. So no changes here. And as we start to slide back, we'll just keep this bearish bent here. Let's go move into the euro yen. Since the euro yen pushed above the 119 level, but fell short of 120. The initial resistance on the upside challenge is 2020, and the support is 1924, followed by 1893. Well, we'll go with the levels. So we're getting 1924 right there. There you go, right there in the middle. 1924 is going to be our support for today. Below that be 1893, but 1924 we'll go with. On the upside, let's go and take a look here on the 2-hour chart. And right there's going to be resistance. 1968. It's bullish. So this is the euro odd was turned away a second time at the major level of 63.41, confluencing with 63.49 to 50%. The pair should find support on the pullback at 61.76. Sellers are expected to emerge at 63.14. Well, we're just above the 63.14, but you can see that we came up to the 63.41. I'll show you the significance here. You see that? Huge level right there. This is the second time they've been turned away. The only difference is it's giving a little bit of a boost is that as I mentioned, the Aussie's like, basically spitting on this supposed headline because it really isn't much of any news whatsoever. So the Aussie is giving more, and the euro, which isn't doing anything fantastic, but it's getting that push against that. So resistance will actually put the resistance coming in right there, technically speaking. So it's going to be 63.13. And support, we did mention about 61.76. Let's go and take a look at it on a 2-hour. I'll give it the benefit of the doubt here. Call it 62.34 for right now. Let's go into the Euro Kiwi. Well, we are breaking higher here. So since the Euro Kiwi is awaiting a breakout from the tight range the pairs endured for over a week, the initial upside breakout level is 75.03. Well, we're just right there now, with a potential move to 76.26. Downside breakout level is 73.09, with a potential move to 71.65. Well, this once again has a lot to do with, like I said, the Kiwi and the Australian dollars are basically, the market there is giving you its vote of what they think about this supposed trade deal. And they're pairing back, and that's allowing the euro versus the Kiwi to pop up. We'll go with this, what we said, which is 75.03. You can see that here. That'll be our resistance. And support, well, it's going to be right this breakout area right there, which is going to be 74.43. There. Let's go move into the Aussie yen. The Aussie yen is broken to the upside, challenging major resistance level of 74.02. Immediate upside or stretch would be 74.73, and that was the case we broke higher on the Sunday session, which obviously we didn't because the headline wasn't much of a headline at all. China, it would be 74.73 as the market digests the China trade headlines. Support is 72.98. So we'll go with the 72.98. And on the upside, yeah, there's some neat, nice resistance coming in there. You see that? So let's go right there. 73.51. And let's go move into the guppy. The guppy rallied to 37.73, which is a 50%, 26.67, 48.92, nearly tagging the resistance level of 38.20. A week starts out with potential the yen weakness with potential yen weakness. 38.20 should work as a pivot. The support comes in at major level 36.02. So we actually just came down here and just tagged that 36.02. So there's the support we were talking about. And on the upside, we're going to move into the 2-hour. See if we see anything on the 30-minute. If they do pop it, come up there at 36.81, which may be a stretch. We'll find out. We'll give it the benefit of the doubt. At least you know what your risk is. So we'll call it 36.80. And finally, with the sterling versus yard, sterling yard. The sterling yard rallied to a resistance level of 86.57. Resistance is 87.50 with support 85.34. Followed by 84.71. The combination of Brexit headlines and the Aussie digesting the impact of the China talks headlines should produce volatility on both sides of the trade at extremes. Well, like I said, we just didn't see that on the opening, if you want to call it the opening bell or the opening portion of the Sunday session. But we did mention here is that with support of 85.34, and we're going to go with that 85.34 on the downside. And the upside, let's go and take a look here on the 2-hour, get a better feel for this. Well, it's having a tough time right here, but it's going to be right there. You see it? 86.20, 86.20. There we go. We'll just take a quick look here on a couple of the other markets. We have seen a good little pullback here in crude. They got a little bit carried away also with the whole risk on. well, really the way the market was going. But the risk on here was up to 55. And we see this market going to pair back to the 54, so kind of working both backwards and forwards. But you can see here that the levels here, gives you a pretty good idea of what you're looking at here. We'll see if they can get back above this 54. On a very short-term area here, you can see here the risk was coming in right there, 54.85, which has kept this market in check. Right from the opening bell. I thought we might have had a chance for 55. And we actually stalled right there at that 54.85. Actually, I had to put a limit at the time. It didn't get filled, and then we just dipped down to 82, 80, 75. And we kind of dithered there. And I said, I'll just wait till – I'm not used to trading crude oil in these – I want to call it these after hours. I mean, and I thought, you know what? I'll just wait. But, I kind of felt that was going to be it, although I didn't think we'd slide all the way down to 54. But we saw this market. We can actually look at another. I'll give you what I'm referencing to. I thought to myself, I go, I'll just wait till there's better volume. But you can see here how this market. You see here, right here was, and it just kind of rolled over and just kept rolling over and rolling over some more. So let's see. I mean, on a very short term resistance here, there's 54.48 there, and you can see on the daily 54.43. We'll go back to the daily. You see here, there's that 54.43. So keep an eye on that area, 54.43, 48. That might be if they try and make a return rally back up here. That's probably where they're probably going to run out of gas and roll back down. It already had a little bit of a run, but it's even been a questionable run. Remember how we saw here? We thought those were good levels, and look, we moved hard, but we kept giving it back. Now we come up here with this China news, and now the market's probably going to pair back a little bit. How much? I don't want to say, but I mean, probably good pair back. Probably going to take us down to about 53.5 potentially. Gold, it got knocked pretty good. I actually picked it up and was able to get out, fortunately, before it rolled over. But we saw the market bounce back. We saw a decent little bounce back in here off of those lows. S&Ps, like I said, you made it up all the way back up here to the 78. Look, it was a nice move up to the 78%, and then we saw the market's kind of giving back a little bit here. It's going to be an interesting day with Columbus Day. We'll see what all transpires. We are seeing the boons come off a little bit off of those that heavy selling that we saw here. And see this thing go. Coming all these other markets, I messed my charts up. So I had all this marked off, so I don't know what the deal is here. But anyway, we've seen a nice little rebound here in the 10 years. But that's all that we have for today, and we'll see y'all on the daily roundup. Have a great day, everybody.